glad you are here. Hi, Rochelle. Glad to see so many of you here. So, like I said, there's a lot to talk about today. My name is Stephen Ground, and I'm thrilled that you're here with us because I really do believe that the next 24 hours in the market, really the next 12 to 16 hours in the market, are some of the most important all year. Tonight, when the markets close, we're going to get NVIDIA earnings, also CRM earnings. NVIDIA isn't alone in reporting earnings after the market, but they certainly are the top dog, as you already know. NVIDIA earnings have the potential to rock the direction of the entire market. Right now, investors are pricing in a massive move of 7% in either direction after the earnings come out. I saw 6% from another source this morning, so somewhere in that 6 to 7% range. I think that's about $250 billion, maybe, based on their market cap. I looked that up earlier. Maybe it was 25 billion. It was a lot of money. And while some folks, including Morgan Stanley, are bullish on the chip giant, and they're calling it a top pick ahead of earnings, others fear that China's tariff news could send the whole tech sector lower. Including Jensen Huang has been very, he's called it a very bad outcome for China to have high tariffs and the US to be in a trade war with China. Now, in a normal week, NVIDIA earnings would be the top news item on the calendar, and they're certainly taking up a lot of the space on Yahoo Finance, The Street, MarketBeat, wherever you might go to check in on the headlines. But I think on Thursday morning, we could get one that's even bigger. And many traders could be sleeping on it because of NVIDIA earnings and other things. I'm talking, of course, about the official Q1 United States GDP print. Now, according to early projections, this number is set to come in negative, slightly negative, for the first time since 2022. That would be very bad news for the economy and would be an early reflection of the impact of the trade war that is ongoing. You might remember that day that those early projections came out back in April. It was at the end of April. The market sold off hard, and then they rallied back very hard and closed at about break even by the end of the day. Now, we talked about it at the time. Nate and I for sure talked about it. We may have had a roundtable right after that, talking about how, that seemed like such a positive, bullish sign for the market that they could get this horrible piece of economic news and still find a way to rally higher. And it is, but that doesn't mean that the underlying reality has changed. So despite that being one of the craziest one-day reversals that we can remember, there's still bad news for the economy. You see it every day, the chaos of, tariffs one day, no tariffs the next day. There's good news too, depending on who you ask. The US Steel merger is very good news. So it's just, there's a lot going on, as you all know. You don't need me to tell you that. But today specifically and into tomorrow morning, if the 1-2 punch of an NVIDIA disappointment and bad GDP hit the same day, we might not be so lucky as to see that quick reversal, and it could change the direction of the market. Remember, the last time we saw a negative quarter of GDP growth, it was at the start of the painful 2022 bear market. And you probably don't need me to remind you, if you've been trading for a few years, how that went. Is that guaranteed to happen again? No, of course it's not. In fact, I probably wouldn't even say it's likely that we enter an extended bear market, but we could see a very, severe short-term correction, as we remember recently from just back in March. And traders need to prepare for the huge possibility of a big move in either direction as soon as tomorrow morning's opening bell. So that's why we're calling this Roundtable Decision Point 2025, right? Because it really does have that potential to go way higher and confirm the bear market or the bull market that we're back, that investors are fully confident, or shoot lower and surprise investors to the downside. So I've called in all our favors to bring you the biggest and most, maybe most important roundtable that we've done yet. So let's talk about the all-star team who's joining us this morning, because I'm really excited to have all of these guys here. We've got Lance Ippolito. You know him. He's the senior options strategist for the Trading Pub. He traded a $30 million account for a private hedge fund based in Florida. He's a mastermind behind tracking institutional order flow, basically where the big money is moving in the markets. He's also developed the master indicator, the news flow scanner, the penny option scanner. You've hopefully seen and used those tools in action. They're pretty incredible. And today he's going to be able to give us a live look at where institutional money is going ahead of NVIDIA. There may be some live trading. I know Nate and Graham have teased possibly doing an NVIDIA trade today. So you're going to want to stick around and see the details on that. Speaking of Nate, we've got Nathan Tucci joining us. He's got over a decade of experience trading everything from Forex to stocks to crypto and beyond. He's worked with dozens of the world's leading experts, helping them refine and develop strategies. He grew his investment and dividend portfolio by over $100,000 back in 2024. And as an expert on market prediction, he predicted a 2024 market melt up and a post-inauguration collapse all the way back in 2023. So basically had the crystal ball for what we've experienced over the last 12 months, and maybe he can give us some insight into what we'll experience the rest of the year. We've also got Roger Scott, of course. I'm sure many of you know Roger. He's got over 30 years of experience trading everything from corn futures to stock options and ETFs. He ran his first fund with two Ivy League economists, both of whom have been advisors to multiple White House administrations. He managed multi-million-dollar hedge funds and managed money for one of the richest families in the world. And he's, of course, been featured on CNBC, CNN, Forbes, Bloomberg, and Fox Business, as well as many of our roundtables. We've got his protege and student, Kane Shieh, who's a former PIMCO VP portfolio manager. He helped manage 1.7 trillion in assets, including for companies like Disney, Google, Apple, and more. He traded $200 billion daily volume on average back in the day. So he's seen the inside of how that institutional money moves around and where it goes and how those decisions are made. He's also traded with living legends like the bond king Bill Gross and the Allianz chief economic advisor Mohamed El-Erian. And he's, of course, tracking the incredible gamma pockets, which he discovered inside many of the most popular stocks. Also, Jeffry Turnmire is joining us. Love having Jeffrey on the roundtables. He's a civil engineer by trade. He's also a market savant who's been fascinated by trading since elementary school. If you got to join the crypto roundtable of last week, I think last Thursday, he absolutely blew folks' mind with kind of his detailed behind the scenes knowledge there. But he's not just a crypto guy by any means. In fact, he grew his retirement account, his family's retirement account, to 1.4 million. During the COVID crash, he discovered the income glitch that he's traded at 82 times with zero losses since June 2022. That number is probably higher now. I forgot to check before this, but could be even higher. And he's a husband, father, engineer, 3D printer, beekeeper, pilot, pretty much every hobby you can think of, Jeffrey has done and mastered. So fascinating guy to have on the panel. We've also got Graham Lindman, who's an options expert with over a decade of experience trading the markets. He studied technical analysis with two of the top minds in finance. He developed and popularized wrap order option trades to help traders cut entry costs and control risk. And among his many strategies, he did mastermind NVIDIA Elite, so should have a very good insight into what to do with NVIDIA today. And like I said, they're talking about potentially even dropping a live trade during our session today. So something that you can potentially follow and jump into if you decide that it's a good idea for you. And last but not least, we're welcoming Chris Pulver, who's spent nearly 30 years in the markets as a trader, a former money manager, and a teacher, an options chain analyst and derivative specialist, and an expert on zero DTE setups as well. He's a player and instructor with PGA of America, which I'm jealous of, certainly the ability. And he personally has managed multiple $1 million trading accounts. And I'll be here to guide them through it all. My name is Stephen Ground, if you're just joining us. I'm thrilled about all of our panelists who are joining us here today. We've got an amazing team. I think it's the first time we've had 7 on the roundtable. So that's extra special, and I'm excited to get through all of it with them. But I'm extra excited to announce that our friend Chris Pulver, who I just told you about, is going to be sharing something brand new with you all during today's section. And it's a really powerful, exclusive new get ready, get set, go trading tool for identifying stocks right before they make breakouts. I think it's perfect for the market right now because, it's predicting direction feels impossible. for most folks, and he's going to kind of change our mindset on how to do that. And on top of sharing the details on that tool, he's also going to be sharing some free stocks at the end of today's presentation, a watch list you're going to want to stick around and get your hand on. So a lot of free stuff today, a lot of valuable, actionable trading ideas. That's what we always try to bring you with the roundtable. And like I said, we're going to be covering NVIDIA earnings. We're going to be covering the GDP print tomorrow, probably dive into a lot more that's going on. And that's why I think this really might be the most important roundtable we've hosted so far. So I'm excited that you're here. So my introduction out of the way, what's on your mind? Tell us. It's a good time to start hearing from you in the chat. Tell us your name, where you're coming from, how you're feeling right now about the market, maybe what you're expecting from NVIDIA, if you think the GDP print is a big deal or not. And most importantly, you can start sending your questions for our experts now. We've got Deanna in the chat and myself, who will be keeping those for the end when we do our Q&A. So we're getting started officially in about 6 minutes, but we're here helping you get ready. So welcome to the Decision Point Roundtable. We're super glad you're here. Really appreciate everyone who spends time coming out to our roundtables. We love it, and we're really, really glad to have you. We've got Kirk saying hello. Hi, Kirk. Welcome in. Babette as well. Nice to see you. Leslie from California. Pete from the Netherlands. Pete, I think you are on every roundtable, which I love and appreciate. Glad that you're here. Roger says his hobby is underwater basket weaving. I've seen him do it. He's great at it. Just take my word for it. Yeah, he'd be good at that, I'm sure. Welcome in from New York, Hank from Tennessee. We've got Joel from Maine. The names are moving so quick. Anil Kumar from Georgia. Welcome in. Mike from Georgia as well. If you can't hear me, can everybody hear me? I've heard a few folks say my volume is low, but I think I've got mine maxed out. So check on your side if you can hear me okay. Mike says it seems okay. Doug says NVIDIA should be up. Well, here's hoping, Doug, from Wisconsin. Welcome in. We've got Indiana and Louisville and Kentucky checking in, all right there in a row. I love that part of the country. And welcome in to you all, Steve, Kaylee, and Ken. Wow, these names are moving fast. We love it. Steve K in Missouri. I'm a Steve from Missouri originally, so welcome in, Steve. Glad that you're here. Are you on the St. Louis side or the KC side or somewhere in the middle? Would love to hear from you. Samantha in Hawaii, jealous of where you're checking in from, Samantha, but thank you for joining us. I'm sure it's still pretty early there, so thank you for waking up early to be with us. Oh, we got a lot of folks. Willis from Kansas City, welcome in. Jake from Las Vegas, welcome to you as well. Got a lot of folks. Love it. We have a ton of people signing in, and I'm glad. I'm sorry if I missed your name and didn't get to say hello to you, but hello and thank you for being here. Super excited. We've got a great team here today, really probably our best roundtable panel we've had so far. And I'm really, really pumped because I just think, the news lately has been, chaotic to say the least, I would say. I put it in my newsletter today, just since the weekend started, we had the House passing the big, beautiful bill that Trump has been talking about. Trump seems ready to approve the U.S. Steel Nippon Steel merger, which both he and the Biden administration had historically been against. He threatened the 50% tariffs on European Union countries and then revoked them or paused them until July 9th. We've got companies reporting bad news about tariff policy. We've got crazy tweets. We've got credit default swaps hitting 2008 levels. We've got Japan going crazy as well. So there's just a lot going on. It seems like every day is about a month-long news cycle at this point. So to try and keep track of that as a trader and know what to do with your money, when your money's safe, how to stay on top of things, it can feel like a lot. And that's why we bring guys like Lance and Nate and Chris and Kane and Jeffrey and Roger and Graham here with us to sort it all out for you, because I've got as many questions as you do, and I want to know the answers as well. So I'm excited to have them all on here today and joining us for the roundtable, which we're starting officially in about 2 minutes. So it should be a great time. Glad you're here. And remember, possibly live trade ideas. I think we're going to get them from on NVIDIA. And I know that Chris has a watch list that he's going to give away of stocks that are setting up for potential breakouts. So there's a lot of really cool, actionable stuff for you as well. Welcome in Trinity from Hawaii, a couple folks from Hawaii waking up early for us. KS from Georgia. Robert, welcome in. Glad you're here. And remember, drop your questions for the experts too, because we're going to be getting into all of those when the time comes for our Q&A here. So welcome in. Ken says Roger's VIP room just ended, which makes sense. We're seeing a bunch of folks jump over. So glad that you are joining us. Thank you for being a part of this. Thanks to Roger for jumping on too, which he will be in just a second. Reese says, good day, everyone. Welcome in. Glad you're here. And yeah, it's about 60 seconds till showtime. So welcome in everybody to Decision Point 2025, our roundtable for May. We've got a lot to talk about. So glad that you are here. NVIDIA and GDP and a whole bunch of stuff happening, and we're going to dive into it. So thank you all for being here. Kane, welcome in. Glad to have you here. How are you doing today?
I'm doing great. How are you?
I'm great. I feel like this is I was just saying, I don't know if you heard, but it feels like every day is about a month-long news cycle at this point. So just a lot to cover and talk about. So I'm glad you guys are here to help me sort through it and help all these folks through it.
Yeah, I'm glad to be here too. Can't wait to hear what everyone has to say.
Awesome. Nate, welcome in. Glad you are here as well.
Why, hello everyone. Happy Wednesday. Can't believe it's Wednesday already. Those long weekends really get you.
Yeah, they mess with your brain. And Chris, glad to see you here as well. I'm very excited for what you've got to share. I know you've got some big things in store for us, so thanks for being a part of this.
Absolutely. Looking forward to it. Never a dull moment. I would say that I was a little. It's funny, like this market's been going up, and I'm annoyed. But it's fine. It's just like I wish I was participating a little bit heavier. But when you want to buy at the low at 496 SPY and participate for $100 a share, it's like I feel like profits are good to protect, and it's like I should be more greedy. So anyway, it's been an interesting position. I'm curious what everyone has to say as far as like, are we going to get a pullback? Are we, so I'm excited for today's session.
Yeah, I'm sure there's going to be some various opinions, which I always like getting
Yeah.
into here. Graham, welcome in. Glad you're here.
Hey,
Thanks for
good to
being
see you
around.
all. Big room today. Love to see it.
Excellent. And
What's a
Roger, you
pullback?
too?
Can
Yeah,
someone
exactly.
thought
Right.
we were
It doesn't exist anymore, man.
thought we were all in. Jump on, Chris. I'm going
Yeah.
NVIDIA gamble trades and the whole
It's a
nine
good
today.
time to buy. It's a good time to buy.
Donks, man.
Yeah.
Amazing. Roger, good to see you. How are you doing today?
Excellent. Good to see all of you. Nate, nice and orange. Look at you.
Nice and
Very
orange.
orange.
That's what they
Very
all tell
orange.
me, Roger.
Hope everybody's doing great today. Nice to see all of you. Think this is the first time I've seen all of you together in quite some time.
Yeah,
It's
that's
been a
Roger, I
minute.
see you're enjoying the beach today. Yet again.
Definitely. Oh yeah. Yeah, right at the beach.
excellent. And Jeffrey, welcome in. Checking in
Hey,
from Knoxville. How are you doing today?
another day in paradise.
Mm-hmm.
Allergies trying to get me a little bit, so
Oh
uh,
boy, that's never fun.
yeah.
Time of year though, it's gonna happen,
It's that season.
unfortunately.
That season all year long.
True. True. All right. Well, we have a full house here. I think Lance is going to be hopping on in just a second, but don't want to waste any time because we've got a ton to cover. So I had a kind of a lightning round to kick all of you off with, which are just the quick questions, your thought on is the GDP print going to matter tomorrow morning? What's going to happen with NVIDIA tonight? And, will there be a major move either direction in the market tomorrow? Graham, why don't we start with you and your thoughts?
I do think there will be a good sized move tomorrow in the markets, probably 1% or more in either direction. Most likely. I don't think, I mean, GDP, it's pretty baked in that it should be negative. It would be a shocking surprise if there is growth from Q1. So I don't think we're going to see a positive reading there. Could be wrong, but I have a very good feeling that it will be negative. But I do think that NVIDIA will be the bright spot for us tomorrow. I think they're going to have good earnings. I think we're going to see a jump in the stock. Maybe not immediately. Maybe it will be soft like last quarter's earnings at first, but I do think that we will see bulls returning to NVIDIA and tech stocks and more risk on assets, especially now that like the tariff news. I know we had that little shakeout last week, a little scared there with the EU tariff news and the supposed Apple tariffs. But since then, that's all has seemed to, peaceably for the most part gone by. And I do think that bulls are going to stay in control.
Yeah, that was already baked in and baked out by the time Tuesday
Yeah.
started.
Yeah,
That's the weekend's for. Just forget all about
that's
it.
right.
Yeah.
The weekend
All
is
right.
for Twitter and Truth Social.
There you go. Love that. All right, Nate, next. You're next on the lightning round. What are your thoughts?
I think it will matter in the sense of maybe a reaction, but I don't think it actually matters. And I'll save my deeper thoughts because I have a couple slides on that when I get a chance to share. But I don't think it matters in real terms.
Okay. All right, Lance, thoughts on NVIDIA today and GDP and how much it matters for tomorrow morning's open?
I didn't even know there was GDP tomorrow. So, so I'm, no biggie there. NVIDIA is interesting because it's going to weigh such a big, big move on the market, and that's why the market is, pretty much flat today. It's all in anticipation of NVIDIA, but I like it. But instead of playing NVIDIA, I actually like CoreWave a little bit better. You only, for NVIDIA, you got $8.50 move. CoreWave only about a $9 move. So I think actually it's pretty light. So I grabbed some weekly lotto ticket calls, very small, just for a little gamble into the earnings print.
Awesome. Love it. All right, who's next here? Jeffrey, your thoughts on the lightning round questions?
I mean, does it matter? Sure. Does it matter really to the market? Not really. Price action is kind of a coin flip. We've been down off the highs. We've actually been in zoom out a little bit. We've been in a big correction since July and just kind of consolidating. We tried to go higher. We tried to go lower. We've not really been able to break out or break down. So we're in this consolidation holding pattern. How long is it going to last? We're coming up on a year now that we've been in this holding pattern. I don't think this week's GDP preliminary number is going to knock it off dead center for us. We're probably going to have more chop, and we've got the range defined. It's a big fat range, all the way up to 6,000, all the way down to 5,000, and that's 1,000-point playing range. So even though we're sitting in the upper end of it, we have room to come back down a little bit. So that's where I'm at with it right now.
Makes sense. Kane, how about you?
Yeah, I'm in agreement with basically what most of everything that was said so far. GDP is not what is driving the markets right now, right? We're mostly being driven by news. So to think that GDP, unless it's just wildly off of what the consensus is, it's not really going to be this huge moving event. And if it's to the upside, you still have all this uncertainty around the tariffs and everything around that. So you're not going to see this huge run upwards. So if anything, if we just have a huge disappointment, we could go back down, potentially retest the lows, but we're still in that range that Jeffrey identified.
Makes sense. How about you, Roger? Feel the same, differently? What are your thoughts?
I have a lot of thoughts. I think that I don't think we're going anywhere. I think this is just going to be, I don't think the GDP is going to be a big deal because it's not driving price, although I am a little concerned about the bond market being near the lows right now because that could push US dollar and that can cause a lot of nonsense. But I don't think anything major is going to happen with NVIDIA. What I'm concerned about is CRM earnings, because we have CRM earnings before they open tomorrow. And if CRM doesn't provide forward-looking guidance, then that's going to be a very, very, very big problem for us. And it can also be a situation where NVIDIA comes out good or bad, and CRM comes out the other side, and they can offset each other. But the problem is, you see, as all of us painfully know, CRM provides retail marketing solutions for the biggest companies in America. Not little mom and pop shops like us, but real big companies in America. And they're forward, if they slow down, and if they're saying that we're slowing down, it can have a very similar effect like Target or Shopify, a very related type of an effect. So I'm not simply watching NVIDIA, I'm also watching CRM. And I'm really looking at what their forward-looking statements are going to be. But I have to agree with Kane, and I think it was also Jeffrey and a couple of others that said, as far as GDP is concerned, I don't think that's really driving price right now, aside from maybe a little bit of an action on the bond market.
All right. And last but not least for the lightning round, Chris, how are you feeling with NVIDIA and GDP before
Yeah,
tomorrow?
I think on top of the earnings too, this also is a lot of releases in the retail space. So Dick's Sporting Goods, Abercrombie and Fitch, Macy's, Foot Locker, Best Buy, Kohl's. I'm always wondering like how's the consumer doing? I mean, we've seen some charts get thrown around in our Slack channel that about 60+%, almost 70% of consumption is all happening by the top 10 or 20% demographics. If those that have are still spending, that's good for consumption. But I'm curious, like, what's the average retail store looking like if they're not offering guidance, or are they offering guidance? So I'm really surprised to see that MasterCard, Visa, Amex are still lingering around all-time highs. I think this NVIDIA play, I mean, it's $3.3 trillion. It's obviously going to be a bit of a mover. The market's highly anticipating it, which is why, like, I think Lance said we're pretty calm today, which is what I expected after yesterday's kind of weird melt up. But going into this week at GDP, I think it's going to be the second quarter. It's not this one that maybe prints negative for the first time. It'd be the second quarter. So if we have another one that's negative, that would be, kind of similar to like last summer's SOM rule getting activated. But the whole recession talk and concerns. I mean, basically what we're seeing here is like tariff window is 90 days, and then we'll pause it, and then we'll maybe kick it out another 90 days, and then we'll renegotiate, and then we'll kick it out another 90 days. Like, I don't think there's really any plan on when July's deadline approaches, what's going to happen to like all countries with this first 90-day window. Maybe it's kicked out again. Maybe there's more room for negotiation. So I think the whole thing is kind of fly by the seat of your pants, see what sticks, see who wants to make a deal, threaten 50%, but lower it, de-escalate it. We did it with China. We're doing it clearly with the European Union from last week. So I think the market, interestingly enough, I'd like to see some pullbacks. I posted a video a couple weeks ago, 3, 5, 10% corrections to me would not scare me out for being a bull and buyer in this market, but getting to all-time highs and melting up. Nate and I talked about this, like, maybe we're having a global melt up. I mean, if we hit all-time highs and don't have any pullbacks, I think this is a global melt up where China spends money, Europe spends money, we spend money, and it's just this growing fiscal deficit that the whole world jumps on board with, and it's just going to be a bubble that ends at some point. I'm sure Jeffrey has something to say about that too, but this is kind of where we're at. And we could also put in the high for the year and the low for the year, and we just trade in the middle of all of it. And it's just going to drive traders crazy, but traders make money, and passive investors are going to wonder, like, why is nothing working? Why is nothing moving? So it really is like it could do whatever it wants, and we're just trying to find good trades to ultimately make some money.
Awesome. Well, for those who have never been on a roundtable before, that's about what we're about to go into. Everybody's going to get 5 or 6 minutes here to kind of dive into what they're looking at, potentially share some trade ideas and give you kind of their playbook for what really matters right now. So it's a good time to lock in, grab a pen and paper, and really focus on what these guys have to share. And Chris, we're going to give it right back to you to take the ball and run with it and share a little bit about what you're doing, including maybe a preview of this new breakthrough that I know you've been really excited about and working hard on for a while now.
Sure, I'll get a little teaser. So let me show some charts first. This is what I'm watching for this week. I think we have some resistance right around 59.60 and support around 57.70. We're now stuck in a candle this week that so far is the same as the big U.S.-China trade agreement de-escalation gap higher in that move for that week. We haven't closed above that high. We haven't closed below that low. This week is trading basically inside both of those candles. So, a break above 59.60. We've got open space to run up into the 6,100. That would be a cup and handle measure move as well. Or we break back down. I think everyone sees that obvious China-U.S. trade gap. That'd be roughly about a 5% correction from this recent move. Like I said, 3, 5, 10% wouldn't scare me out for being a buyer in this market, but I'm certainly waiting to deploy capital if I get some dips. So I want to be watching prices closely. Like I said, I'm a bit perturbed and annoyed. Like, if we go to all-time highs without pullbacks, that will be a frustrating way to like not participate in that little melt up. But I also think that a good way to be an investor this year is be patient on gold. Okay, I think gold is still due for a correction back to the 200 moving average, which I'm patiently waiting for. So I'm not trying to jump into crazy gold, but it's a nice diversifier in my portfolio. I'm sure all of us, if we're participating in Bitcoin, we've had some fun with it. This has been a great trade since the accumulation back at previous all-time highs back in April. Bitcoin's kind of cemented itself as a nice little diversifier as well. Bonds, I was curious what Roger thinks about this. I mean, look, the bond market doesn't necessarily have to go anywhere. We could stay here and still offer 4+%. You know, global bond yields are going up, not just in the US, but in Japan. That could be a bit of a blind spot in the markets if we have Japanese government bond yields rising, and then that brings global bond yields higher. I think there is at some point, if US 10-year, US 20-year are too high, it's going to choke off growth a little bit. There's that big air pocket that everyone's worried about later this year. But opportunity-wise, I will give you a little teaser here. Look, all I said is I don't care if this market goes up or down. I'm just trying to make some money. So, you know, we'll talk about this in a little bit, but basically over 10,000 stocks, I can find what I have in a watch list. I put this in my Discord channel this week. I've got 14 actionable trades that I'm already in 4 of them, and I'm looking to take some more. So my job is all of a sudden become a lot easier. This used to take, you know, hours and hours and hours every single week of just trying to find some good trades, price everything out. Now I can do it in a matter of minutes. So that's what I'm going to be excited to talk about here in the next maybe hour and a half.
Awesome.
Is my time up? I'm trying to respect the 6 minutes you gave us.
Appreciate it. Yeah, so you're going to dive into that a little bit later and share a
Yeah.
watch list to some of those actionable opportunities,
Yep.
so folks can get the details on that in just a bit. But before we get there, trying to find my order of operations there again. Roger, maybe you can answer Chris's question about the bond market and your thoughts a little bit, and then dive
Yeah,
into what
yeah, I
you
was.
have to share.
Yeah, my thought. Let me just share my screen real quick.
Please.
Here. Okay, perfect. What my concern with the bond market, and I'll show you what my big concern is real quick here, is my big concern is that if we see the bond market really taking a big dump, it may put some weakness into the US dollar. And if the US dollar gets below this area right here, which effectively, you know, below par, it can start shifting money into more defensive assets and take money away from value funds and do all of, well, I'm talking to you, but for all of you folks who don't know this, but that can take money away from value funds and Fortune 500 funds and put them into more defensive funds, or take money away from US government. The last thing we want is the US dollar to go below this line. So my fear is that if the bond market, if the US dollar cools off some more, it can put the bond market into a little bit more weakness, and we can break this level. And if we break this level, we've got some. It just puts us in a very unfortunate environment in terms of long-term rates. That's kind of where I'm going with that, and that's one less headache we need right now in light of all the global uncertainty. That's kind of where I was going there. And I just wanted to make a comment, Chris. Dick's and Macy's already came out. I'm assuming
that was this morning.
Okay. I just wanted to make sure, because you mentioned
I was just
those
saying
two.
the pulse of retail to see like how everything's going this
couldn't
week.
agree.
Yeah.
Yes, as a matter of fact, I think you might have undersold the impact of consumers on the economy. It might even be more than 60%. So
Sure.
it's a huge amount. But I wanted to show you guys something interesting. So Lance actually mentioned something very quickly when he was talking, and it was the fact that NVIDIA options are very. He mentioned that they cost about $8, or that NVIDIA is implying $8 into his range, which is absolutely correct. I want to show you something interesting. So let's say right now you wanted to make a bet on NVIDIA, but you didn't know which way NVIDIA is heading. Well, one way to trade that would be to do a straddle or a strangle, okay? Which is basically taking advantage of both sides of the trade. A strangle is when you use two different strike prices, a straddle when you use one. The problem is, as Lance pointed out, the price, if we're going to go just past the report, look at the price. The 135, 136 is $4.65, right? And the put side, you've got the same problem, which brings us to the $8 something that Lance mentioned. And Lance, I hope I'm not misquoting what you were saying earlier. I heard you say something about $8, and that's right what the expected move is on NVIDIA right now. Now, that's a little too much. Why is that too much? How do we know it's too much? Well, if you take NVIDIA, I'll be very brief, Stephen. I won't take long. If you take NVIDIA and you go right here, you go to the ATR, you'll find out that NVIDIA has an ATR of only $4.25. So you're pretty much, if you're going to do a straddle strangle, you're paying twice the cost of NVIDIA, which is, you never want to pay more than one ATR for a straddle strangle. So what I decided to do, and I gave everyone this trade in my VIP room earlier, and I'll do the same thing here for you guys. I thought it would be a nice thing to do. there's a stock that is related to NVIDIA, and that's SMCI, and also related to what's the other one that's coming out? CRM, also related to CRM. Both technology stocks, both chip, type of stocks, consumer discretionary, if you will. Now, if you look at this stock, and if you go to say the 42 put, you're paying only $1.58. And if you go to the call strike price, you're paying about $1. So you're paying about $2.50 to $3. Now, if you go and look at the ATR on this stock, and this will bring us to the end of the presentation. If you watch the ATR on this stock, you will see, I'm just kind of showing you guys how you could do it. And you can look at this in the replay. I'm sure we'll have a replay of this. You could see the ATR here is only $2.80. So NVIDIA ATR is $4 and something cents. The straddle strangle is about $8. Here on this stock, which is correlated to NVIDIA by about 90%, because it doesn't have earnings tomorrow, you could do the same type of position for only one ATR, not two ATR, which is not bad. So my suggestion is if you want to take advantage of NVIDIA and GDP tomorrow, and you don't want to waste a lot of money, you can buy the 43 call, and you can buy the 42 put, and you could spend about $2.50 or $2.60, and you've got about 2 days, and you can take advantage of volatility moving non-directionally. And that completely moves in line with what Jeffrey's saying, what I'm saying, and what Kane was saying. I'm done. That's it.
What expiration date were you saying on
Oh,
there?
it's right here. It's May 30th. You would be buying the 42 put or the 42.50 put or the 42 put, whichever one you want. And you would be buying the 43 call for about a dollar. So it would cost you $3, $2.50. But that's all good because the ATR on the stock is about that. But if you do that on NVIDIA, it's, as Lance said, it's over $8. And the options are very, very expensive. So it would cost you a lot more to do it on NVIDIA versus a stock like this. NVIDIA, because of earnings tonight. And the interesting thing about this, if you were to do this right now, and again, there's no guarantees, but if you were to do this right now, implied volatility is only going to get higher going into tonight. So there's a good chance if you say put a 20, 30% profit target on it and just held on to it, there's a good chance you can get filled before the earnings even come. So you don't have to worry about that unforeseeability. I don't want to take up any more time. I just wanted to give that trade.
Thank you so much. We're doing
Yep,
good
of course.
on time so far, so appreciate it. And Kane, how about you? Anything you're seeing that we should be focused on, or anything you want to follow up with what those two gentlemen just said?
Yeah, absolutely. So what Roger was talking about, interesting enough, thematically at the very least, is the same thing that I was thinking about. So basically, we have potential short-term volatility coming up, and that's already priced into the market. So that makes a lot of things really expensive. So if you wanted a GDP play or you want to do something short-term, it's really expensive in the options markets right now. So what I'm looking at instead are like second-order effects, not the immediate effect, because that's already priced in. Or at least we're anticipating that, so that it's going to be difficult to make some money that way. So let me share my screen real fast. What I'm going to be watching very carefully is this. It's the Fed watch. I want to know that because of that GDP print, is the market going to start watching? This is similar to what Roger was saying about bonds. But what I want to know is, are we going to start pricing in the probability of a rate cut any differently? So if we get a really negative GDP print, does the Fed come out then and say, oh my gosh, well, we better start cutting rates and stimulating? And if that happens, do we start getting fears of inflation again? So I'm going to write down this number right before the close. My mouse stopped working for some reason. Sorry about that. So that 97.8 probability of no rate cut, I want to see if, especially if it lowers, it doesn't have much room to go higher. But if it goes lower after tomorrow, then I know that there's some moves happening in the interest rates, or at least in the markets for the interest rates, which is directly impacted by on the bond market. I'm also going to look out in July as well. I want to see, do these numbers change? This 77.6 and this 22. So in order to, so I'm not going to try to trade that though. That's going to be a lot of volatility. That's going to be my signal as to what I might do next. And if we do see a nice change over here, then what we're going to start seeing as a second order effect is a rotation of sectors. So right now, the really strong sectors have been the technology, communication, and that's mostly what's been driving this move upwards in the S&P 500 and the major indices. And it's been at the expense of things like consumer staples. Those did really well when we went down over here. So I'm going to expect something similar if we do get that sector rotation, a movement more into more defensive sectors and less so in the technology sectors. One that seems to be defying all of it, though, is ITA, the defense sector. It just doesn't care about what's going on with tariffs or GDP and all this hoopla. So if you are expecting a lot more conflict and turmoil inside the world because there's a lot more uncertainty in the world, then you're probably bullish on defense, and it looks like the market is bullish on defense.
That makes sense. Really good point. Thank you for that. Let's make sure we go in order here because I usually skip it when I don't pay attention. Jeffrey, you're next. I know you've been talking about the pretty wide range we've been stuck in for a year here. Do you think there's anything on the horizon that could break us out of that? Or are we just going to keep bouncing for now?
Yeah, let's talk about something else briefly, though.
Okay.
We've been talking about the dollar and the weakness. So why don't we take dollars out of the equation? How do you do that? You take something like NASDAQ and divide it by gold. Gold, arguably the biggest asset out there. So obviously humans have placed value on gold for a long time. We used to be on a gold-based dollar until one of our lovely presidents took us off of that. So NASDAQ priced in gold, right now, we are significantly below the high we made right at the .com bust. But, unfortunately, NASDAQ only goes back to 1985 or so. And if we go look at the S&P 500, we can get a bigger, longer picture all the way back to 1880s back here. And we're still at a lower high when we take the S&P and price it in gold instead of dollars. Dollars arguably inflating. And, Trump recently posting on, social media and Elon too, that they're not able to get these meaningful $2 trillion cuts pulled out of the budget. So what's the solution? Well, the IMF posted just this week that they plan on encouraging economies around the world to have double-digit inflation for the next several years. Well, that's destroying the value of our dollars. So taking dollars out of this equation and pricing it in something like gold helps us see. But if this were to come on down here, that would look a lot like that move back here. Doesn't have to necessarily go lower, but we might see this continue on lower. Now that could be gold going up to 9,000 and S&P drifting back down to 3,000 to pull us down into this level down here. And let's look at other things priced in gold, like oil. Where's this commodity super cycle? It's not evident on oil priced in gold. It's not evident in gasoline priced in gold. It's not evident in diesel priced in gold. It's not even evident in platinum priced in gold is reaching all-time lows here. Copper, all-time lows. And something that's been red hot, cocoa. Like we've heard about the cocoa shortages. Even that's not really moving that much off of the long-term average here. Now, the one asset that I see that has opportunity, I'm not trying to tell you to jump into this, but somebody asked me this morning, when did Bitcoin become valuable? And my argument was when you price it in gold, almost immediately it started having value, and it's not slowing down. It's the only asset I've been able to find that is actually going up over the long term in gold terms. It's the first asset. We were talking about this last week during the roundtable, that it's the only asset out there that's been able to compete with gold as a value. And you believe it or not believe it, but right now we're in a period where we could see this rapidly appreciate in the coming weeks ahead. So that may be where you should focus your longer term view, is to avoid exposure to the US dollar, maybe through Bitcoin, maybe through gold, maybe through some other alternative asset. And those Japanese bonds could reach out, and that could be the fiat that blows out and causes this house of cards to fall down. They could reach out and get us, the unknown unknown, or known unknown, as we might say. So that's what I kind of brought to show off right here. Hopefully I stayed under 6 minutes.
Oh, no, we're doing great on time. But yeah, I appreciate that. I've never thought of looking at things like that. So are you personally, Jeffrey, a little nervous about the dollar long term then, and thinking about turning your view to this for a longer term window, or is it more of a short term thing to
It just it's a matter of how you phrase it and look at it. I think we're probably going to go through some sort of period of that hyperized inflation. And I think if you're holding a lot of cash or a lot of assets that are priced in US dollars, that you may see that rapidly erode, like we did back here. This happened back here in the 70s. For many of our clients that are watching us here today, you remember when interest rates went a little crazy back here in the 70s. And if you had bought in assets here, by the time we started back into the 80s, if you had borrowed to buy something, all of a sudden it was laughable, what you still owed to pay off that car or pay off that house, because we went through this period of high inflation. And I think we'll probably do another one of these over here, is what I'm unfortunately think we're going to have to do to get that debt to GDP ratio back in check. With GDP declining, this ties into GDP print coming out tomorrow. With GDP kind of declining, the IMF saying that the only way to really get that back in check, the debt to GDP ratio, is to push double-digit inflation for the next several years to try to get that GDP to grow, to bring that debt to GDP ratio back in check globally. So
yeah.
I think that's where the risk is right now, long term.
Yeah, it makes sense. Definitely kind of mirrors the conversation that's been going on in Washington over the last few weeks too, with that bill coming up. All right. Thank you for that, Jeffrey. I'm sure we'll have questions for you during our Q&A, but Lance, you're up next. What are you seeing? Are there any institutional money flows that we should be watching? And I know you mentioned CoreWeave earlier, so maybe tell folks a little about that too.
Yeah, I just think, CoreWeave's been moving, pretty insane the past couple weeks or so. And today it's down $5, which is, nothing. And the market maker move is only about $8.50, so a little over 7%. I think that's extremely light. So let's say you get a bullish move on NVIDIA on earnings, CoreWave goes up to 127 is the expected move. We were just at, yesterday we were what, 125 print. So the options aren't super cheap, but for example, you could go to the weekly 125 call and buy it. Well, it was $3, now it's $4, so it's gone up about 30% since this morning, but it's still not crazy. Or you could just do like a bull call spread, do the 125, 135, you're going to get, you're going to pay about 210-ish. So you're risking 210 to make $10. It's not bad. And then if you want to place Salesforce, here's a name that's really squeezing big. It's Unity, letter U. This is a kind of a meme stock, kind of it's a beast. It's a software stock, video game. Stock rallied from 21 to 25 today. The weekly calls are up 1,500%, and someone just slammed the 25s for this week at 90 cents. They're $1.05 now. So they are jumping. Vol's just exploded in the stock, and you got 30,000 contracts trading. So a cheap way to play Salesforce earnings. And if the stock continues to squeeze, you'll probably have the potential to to scale some out and then keep some into the earnings. Or if you just want to be a little bit boring and play some downside, not take any of the earning lottos, look at names like ABBV. That's ABBV, ticker ABBV. And also you can look at Bristol Myers, BMY, both seeing weekly put buying. Bristol Myers, they just hit the, let me see if I can show here, the penny option scanner, some of the weekly 46 puts. Right now they're 33 cents. Super cheap, right? And if healthcare names sell off tomorrow, you're getting a big, bang for your buck return. There were some Moderna puts right before that. So, ABBV weekly 180 puts are, about 80. So, cheap plays. I think that's what, if you don't want to time the market or, be so caught up in what happens with GDP or what happens with NVIDIA earnings, because obviously, NVIDIA goes up, market's going to go up. NVIDIA goes down, market's going to go down. I mean, you can kind of hide in healthcare and just buy some, some of those cheap puts. And if healthcare, which has been very, very weak lately, continues to sell off, they're very low beta stocks, like Bristol Myers, Pfizer, Moderna, ABV, they're not going to move 5% a day. You get a 1-2% move in those stocks and the options are going to move pretty good. So just a little alternative. So if you don't want to, swing for the fences and do an earnings trade and stuff, I mean, you're still getting weekly options, but they're going to be, pretty good sensitivity. So if you hit it, you're going to win big. And if you're wrong, let's say they just stay flat tomorrow, maybe you'll lose 20-30%, nothing crazy.
I like that. Yeah, I appreciate that alternative outlook. Thank you for that, Lance. Next up, we believe we have Nate coming on. And Nate, I know you were talking about possibly an NVIDIA trade and some other things you wanted to share. So,
Oh yeah, it's earnings. Got to gamble. I mean, come on, folks.
There you go.
What are we doing
ignoring
here?
Lance's advice and diving right into NVIDIA.
You got to go for it. I
But
mean,
here's the thing: don't go all in, right, Nate? Maybe Nathan should do the risk disclaimer.
okay. My risk disclaimer is that I am using the word gamble. This is yeah. I mean, I'll explain why I like it from a quote unquote risk reward, but I'm using that term very, very lightly. All right, let me jump in because I got a couple slides to cover here. So roundtable notes and NVIDIA bonus. So thought number one, I don't think GDP matters a whole lot in real terms. The economy and the stock market are massively divergent. I think that's super important for everyone to realize. I don't have enough time on this roundtable to go down my whole soapbox on this, but just I think super important and something that a lot of people get wrong is they say, oh, my local, car salesman isn't making any sales the last 6 months. Things are really bad. Therefore, the Mag 7 is going to collapse. And it's just not the case. They're very divergent. That snowball, I think, in a global economy can go further and further. Go back to the 70s. The economy was more closely tied. 2000 tech bubble, a little bit further. 2008 housing crisis, a little bit further. 2025, I think we're a little bit further. And I think a lot of that has to do with the global economy and the fact that the United States might be in bad shape, but then you start doing these comparisons. Well, compared to the EU and the fact that we're still the base currency and all these kind of things that get caught up in the equation, it gives you a little bit longer of a runway before you have to pay the piper. So I think that's a big part of it. GDP is a lagging indicator. I mean, on average, stocks are actually going up by the time GDP shows a recession. So keep that in mind. Even if we see some of those numbers print, that's not telling you what the sentiment is today. And 2025 is certainly news-driven, speculation-driven market, probably like we've never seen before. So I don't think that, the economic values are going to play a key part in what people are buying. Thought number two here is what I call win big or lose the same. So first, let me ask a question. Does anyone see this market being mostly flat for the next 34 days? Give me a yes or no in the chat. That's the start of Q1 or July 1st. Give me a yes in the chat if you think we're going to be flat. Give me a no in the chat if you think we are not going to be flat over the next 34 days. Just curious here what we get. Steven, you can do the counting there, but I'm seeing about 500 no's right now.
There are a few yeses, but yeah, mostly no's, I would say.
Yeah, I think I maybe saw 6 yeses and 500 no's. So yeah, and I would tend to agree with the no's here. I see this as a market that is squeezing hard toward all-time highs. Like Chris was talking about at the beginning, and he and I had a one-on-one call the other day. I agree with him on the risk, but I think we're squeezing to all-time highs, setting up that risk to hit even harder personally. Wow. And I think it's a top-heavy squeeze. So, for example, SPY and IWM since April 7th up. I mean, that's an insane amount to be up since April 7th, 15 and 16% respectively over 6 weeks or so. But add in the QQQ, a little more concentrated, a little more tech heavy, a little more mega cap heavy. That's up 22%, which again, 22% compared to 16%. When you're talking about 6 weeks is a massive increase. I mean, that's a big divergence there. Add in the Mag 7, now you're up 26% since April 7th. Add in Bitcoin, now you're up 41% in the last 6 weeks. So we're getting this very top heavy rally here, this kind of what I've been calling a risk on squeeze since that time frame. And so for me, you could look at this as, hey, the market's overextended, it's due for a correction. All those things might be true from a technical perspective, but I think this market is all in on trying to make that kind of move. And by the way, a little shout out for Chris here. What do you trade in this kind of environment? Well, he's going to show you some ways to find things that you can trade that still have movement potential when things are looking like they are right now. But in the meantime, if you don't think the market is going to be flat, what that probably means if you're an options trader is that whether you're playing the SPY or the Mag 7, you'll be wrong if you're wrong, right? If you don't think we're going to kind of coast sideways or have small manageable moves, very likely what that means is if you trade the SPY and you're wrong and it flushes 2 or 3%, or you trade the mags and they flush 5 or 6%, and you're an options trader, either way, you're wrong, right? Again, you're gonna lose whatever value you have on the options. So for me, I would rather play the assets that have the chance to win the biggest and just be wrong if I'm going to be wrong. So if we do get this squeeze, we do get a kind of a risk on environment that lasts another 2 weeks, 4 weeks, 6 weeks, 8 weeks, whatever it is, I would personally rather play the assets to have the chance to win the biggest. So for me, my favorite win or go home assets, IBIT. By the way, Roger mentioned if the US dollar index does collapse, I think that actually still helps Bitcoin being priced in dollars, help it squeeze even higher. Again, short term. I'm not talking about long term, I'm talking about short term, helping it squeeze. I like Tesla or TSLL. We called that back 2 roundtables ago. I'm up $57,000 on my TSLL, by the way, since then. So hopefully you guys got in on some of that. I like Apple for different reasons. I think it's kind of delayed right now and maybe one of the more overcorrected assets, kind of from a risk reward perspective. I like Apple. I like trading the MAGS ticker directly. That's a Mag 7 ticker. Obviously, that if you have Tesla and Apple, you're now doubling up your exposure to those assets. I like CCJ and GEV, which are more of the energy risk on plays versus the tech risk on plays. And then, of course, NVIDIA, which I'm still holding. I'm holding all of these, by the way. These are not just theoretical. I would trade them. These are all assets that I have significant risk on the table right now. And then NVIDIA is in that list as well. So thought number 3 is that NVIDIA has more upside than downside this particular earnings. Keeping in mind, thought number 1, the economy isn't really connected to the mega cap stocks. I do not think that mortgages going up has stopped the flood of investment into the AI space. I don't think those are connected right now in the economic landscape, especially because NVIDIA's top customers are other mega cap companies like Microsoft, Amazon, Google, Meta, even Tesla is a customer of NVIDIA. And I don't think that they've slowed down their race on AI, which means a lot of NVIDIA demand. And keeping in mind thought number 2, that I think this market is in full rally mode and looking for reasons to be optimistic, NVIDIA has the chance to give us that. We switch from a market looking for reasons to be pessimistic to a market looking and grasping for straws to be optimistic right now. So I expect NVIDIA to have very good earnings like they always do. The question are, can they outperform expectations to a level that creates a surge? And will they provide optimistic future guidance and a big enough carrot for investors to believe there's another leg up? The problem with mega cap companies is, of course, is there more upside? Can they point to the next leg of upside? They're already worth $2-3 trillion. Can they say, hey, this is why we're going to be worth, $4 trillion, which is a tough ask. But I think if any company has that opportunity at, kind of this AI race, it would be NVIDIA. We've seen NVIDIA beat 3 times in a row without any sustained upside, but I think we could kick that streak to the sideline here. So here are your trades. For a free conservative, I put conservative in quotes because this is still an earnings gamble kind of trade, but it doesn't need much of a move at all for this to be a winner over the next 10 days or so. This is a call vertical or debit spread there, unless I'll post this in, unless Steven, yeah, here we go. That is the more quote unquote conservative trade. You make about 122% ROI if NVIDIA is above 137 on June 6th. And then here, if you want to go a little more aggressive, here's a $5 spread that says NVIDIA basically beats its entire expected move, but you give it some extra days. So you're not just playing tomorrow's move, you're playing over the next 10 days for a little bit of sustained move. That one pays about 222% there with that debit spread. So I'm sorry, Steven, that was probably more than 6 minutes, but wanted to churn through that and give some actual trade ideas there.
We are actually doing pretty great on time for, I think, the first time in the history of Roundtable. So I appreciate that. And with 7 gurus for the first time. Maybe that's the secret. But
There you go.
thank you for that, Nate. Those free trade ideas are in the chat. So make sure you check those out and copy them down if you are interested in following them. And last but not least, before we dive into your Q&A, and folks, don't forget to drop questions in the chat if you have them for our guru. I've noted down a few, but I'm sure there are many, many more out there that haven't been asked. Last but not least, Graham, what do you have for us? What are you doing with NVIDIA earnings and everything else going on?
Well, Nate kind of front ran me a little bit there. Obviously unintentional, but it's cool to see
I'll
seeing
flip
things
the order
like.
next time.
Obviously today we've talked a lot about different macroeconomic things with the dollar and bonds and so on and so forth. And I think that's all really good. I love economics. I was an economics major. I eat it up. I love numbers, but I do have an opinion that you shouldn't really use that in your day-to-day trading or your week-to-week planning of the markets. Yes, it's good to keep in mind, but something that actually stuck out to me the other day, I read about it. John Maynard Keynes, who is known as the father of macroeconomics, once launched a hedge fund that he traded and ran based on what he saw going on with, what we just talked about. The problem is that it bombed out. Why? Because either A, the indicators like GDP are lagging, it's already priced in, or B, the economic factors would line up, but it would take a year, 2 year, 3 years for it to actually come to fruition. A good example of this is if you guys remember back in August when we saw that correction in the market, there was an important indicator that triggered the SOM rule, and it predicted every single recession in the US that has ever happened in the last like 75 years. Really, really important recession indicator, right? Well, if you listen to that macroeconomic signal and said there's a recession, I'm going to hit the sidelines, well, you would have missed out on about 15% of market gain since that dip. So yes, it's very important. Yes, I love it. But for the day to day, what's going on right now, I'm looking at some other things at the moment. First off, where's the money going? Well, I don't think a lot of people know this, but the printing press has turned back on and money supply has hit all-time highs here last month in 2025, right? We saw a peak out in 2022. Interest rates started getting jacked up. We saw that money supply shrink, but now it's sneakily snuck its way back up to all-time highs, like the market did as well. Now, we haven't gotten there yet since our most recent correction, but it is very interesting to me that right now we haven't had that catalyst of rate cuts. We all expected it over the last year. Well, I shouldn't say all. I know, Roger, you've been on top of it saying no rate cuts anytime soon. But at the same time, we've seen all this money flock to money market funds, savings accounts. So we've seen the markets go up, hit all-time highs with a lot of money still on the sidelines. To me, that's a very, very good sign that we're not completely out of ammo here, sitting at the top like a sitting duck waiting to fall. If we do start to get interest rates to drop or people see better risk to reward in the stock market, some of that money can shift over. Another thing that happened recently, and this was just over the last few weeks, is we saw one of the biggest equity outflows in the S&P 500, but it wasn't a huge drop in the S&P 500. We really more so just got kind of a cool-off zone, which I called about a week and a half ago. I told you guys we had a great move higher. We called that, called a cool-off zone. And that's where we are now. So I think this is a very, very healthy last few days we've had in the market. Now, obviously, we had that big update yesterday over the weekend news, but I do think that we're going higher here. I want to see the SPY break 600 from here. If we get a close below the 200-day, I think we're going to go back down to that around that 50-day moving average range. But I am bullish right now. I think we're going to hit all-time highs. I think by June. That's my prediction. That's what I've stayed with for the last few weeks, and I'm going to stick to my guns there. Maybe July, but love to see it in June. And then so I want to look for the stocks that have the earnings power right now. Now, Nate kind of front run me there that I think again, AI, there has been some smoke and mirrors, but it is like an arms race for AI right now still. I mean, we're talking about like a company competing over a laptop or iPhone when it was first developed. I mean, iPhone practically built Apple into what it is today. If a company had another shot at that, they would go all in. They would do whatever it takes. Same with Google search. Same sort of thing with the internet. And I don't think companies are out of money. You know, we've seen the record stockpiles of cash that companies have, especially like Apple right now. I don't think that they're going to stand by and let this opportunity pass them up. I think they know this is a massive generational shift, an opportunity that can make them the next empire stock in the market. So I really, really like to focus on companies like Meta. Meta has a lot of upside, in my opinion, over the next few years. I think it's really great. It's been an amazing trend. We did get that deep pullback over the last couple of months early in the year when we had that drop, but it's been looking really good ever since. And I don't think I don't even think we're near the ceiling for this company now, especially when you compare it to the market cap of Microsoft or NVIDIA or Apple. I think there's a lot of room to grow for Meta. It's one of my favorite stocks right now. Another one that I'm all in on, a couple here too for you, GEV and Oklo. I think that right in line with the AI race is that we're going to need the energy to provide for it or fund it. And we're seeing that red tape kind of get cut here with nuclear energy. Oklo being the biggest beneficiary of it over the last few days. Now we entered this one at $8 a little over a year ago, and then I took a big position at 30 just the other day, and it's squeezed higher. Obviously, a lot of that off the news of that Trump's executive order to fast track nuclear energy in the U.S. And one of the Oklo board members was named the head of that committee for Trump. So I think that these are two stocks that we'll see continue to grow. There's a couple other good names as well, but these are my two favorite right now. The two, Meta's my biggest single stock holding. GV's number two. Oklo's nearby there, which was a big speculative position for me, but it ended up working out so good. So far so good, I should say.
Do you like SMR?
I do like SMR. Yeah, but these are my two right now. GEV was gifted to me when it split off GE. They did that company split, and I got gifted some shares. And I said, "Wow, this thing is just amazing. Been a rocket." And then for NVIDIA, same thing applies. I think the spending is going to continue into NVIDIA. I don't think we're at the top yet. I know that we have an implied move about $9 on NVIDIA tomorrow. I'm going to go ahead and cut that down to about a 5% move over the day. Actually gives us about 2 days here for it to move higher, and I'll throw this here in the chat as well. This is how I placed the trade on it earlier in our opening playbook session. Basically, market makers are expecting that if NVIDIA beats earnings, a $9 move would put it about 144 right now. Let me see. Yep, with the price of 145 right now on NVIDIA. I'm just betting it gets halfway there. And if I'm right, I can make about 180% return on investment there with that trade I just dropped in the chat for you guys. So that's how I'm playing NVIDIA. That's what my thought is for the near term. And again, I'm bullish with Nate. I do think we will have a chance to see all-time highs in June.
Love it. Well, that's a very exciting possibility. I hope we do see it. Thank you, everyone, for your insights. Really awesome stuff. Some free trades there in the chat for everybody. Don't forget also that Chris is going to be sharing a watch list with us here in just a few minutes that you're going to want to see as well. We're going to do something a little different today. We're going to have a big question here after our Q&A, which is I'm going to ask every one of you just, kind of a lightning round in 30 seconds or so, what you're doing, what the number one thing you're looking at to pick trades is right now in this environment. So we'll do that in a few minutes here. But first, there were some great questions in the chat. And continue to drop those if you have them. Roger, first one for you from Mike, and then anyone else can jump in if they have opinions on this. But do you think we're seeing a purposeful devaluation of the dollar to help deal with that? Or do you think it's just a side effect of everything else?
Side effect. I'm not a big conspiracy theorist. No, I think it's just a byproduct of what's happening right now with the economy.
Fair enough. Is anyone here a big conspiracy theorist that wants to disagree, or?
Oh, I'm a big conspiracy theorist, but I don't know about that one, on that specific one.
Fair enough. Jen had a great question. We haven't covered this, but it was pretty big news over the last few days. Anyone have thoughts on U.S. Steel and the potential merger with Nippon Steel? We've obviously seen the shares go much higher over the last few days since that news was announced, but anyone have particular thoughts on that?
I wish that CLF would get some of that love because that one's $6.
Fair. That's fair. That's a
But
good
yeah,
thought.
but I was in U.S. Steel back in 2022 and 2023, and when we peaked out at $40, I haven't participated in that one since the highs in 2023. So, I similar to the mergers and a lot of new, like Spirit Airlines with JetBlue, that merger was squashed multiple times. The whole thing here is like, it's glad that it's making progress, it's happening, but I try not to get super caught up in all the mergers and stuff just because you never know if they're actually going to happen. But anyway, good for anybody that's holding it. It's been, if you traded X, it'd be similar like FCX. There's good wedges, there's good levels to play. Strong support at $30, ways to level into that. Now you're finally getting the blow off move. So enjoy it, trail stop losses, and enjoy the profit.
Awesome. Love it. We had a comment here. Lance, you said that was from you, that the BMY puts are already up 24% if someone took them. So
20, 27% now.
Wow, look at that. Roundtable already paying off.
Yeah, all the
Still in the
healthcare
middle of it.
stocks. I moved the healthcare stock market,
Yeah.
Me talking Bristol Myers, Pfizer, and ABBV. No, I'm just kidding. The stock just took out the lows, and I mean, again, the weekly options they move, so they move quickly.
Yeah, makes sense. Matt's had a good question for anyone. I think a lot of you can answer this. Maybe Kane, we can start with you. What is the connection between the bond market and the US dollar index? And maybe just a, kind of 60-second overview of what people need to know with the bond market, because I think people hear about, well, I'll speak for myself here. I hear a lot about bonds and I have kind of a high school understanding of what they are, but maybe don't see the bigger picture all the time.
Yeah, so if we look at the size of markets, the currency market is going to be the largest, and then you're going to look at, and you'll see bonds are the next, and then the equity markets would follow after that. The biggest difference between, say, a currency market and a bond or equity market is that the bond markets and the equity markets are how we raise capital. So if a country needs to raise money, or if a company needs to raise money, they go to the bond markets and the stock markets. They're not going to be able to do anything in the currency market. So the dollar, if you're looking at the dollar US Treasury, then basically you're saying how expensive are my dollars, or the cost of borrowing my dollars. And then the dollar will be how valuable are my dollars. The other thing is that the US dollar holds reserve currency status, which means that a lot of commodities have to be, or not technically not have to be, but they are traded in US dollars. So a strong dollar makes it a little bit more difficult for global trade to happen. And that's why you see some conspiracy theories about, oh, we're trying to devalue the dollar in order to make it easier for trade to happen. And maybe tariffs are a way of accomplishing that. So if you see a move in the dollar, you will see a move in bonds, and then that'll trickle into equities. I don't know if I answered the question, but
No, that was perfect.
Basically, the stronger the U.S. dollar, the more it'll attract investors into U.S. and vice versa. The stronger the interest rates, the higher it'll be. Kind of like it's best where it's best treated kind of thing.
Awesome. Love it. Thank you. I had a question here. Let me see who it was from. It was from Debbie. Graham, I think this was while you were talking about nuclear, so maybe you can start. What about geothermal energy? Any thoughts on that sector as a, potential option?
No, I'm all in on the nuclear stuff. I'm not a guy who's a scientist who can tell you all about power plants and coal and how all that works. I'm just following what's kind of breaking right now. And obviously, 5 days ago, President Trump, I'll post this in here, an executive order just unleashing this nuclear energy, and everything I've seen looks very good. I know nuclear is a scarier word for obvious reasons, but it's it's a very, very clean energy, very, very like crazy efficient. Oklo has some really cool things. If you guys get some time later today, just Google or go on YouTube and look up a video about Oklo. Some super, super cool stuff that they're doing there.
And that's a good way to play NVIDIA earnings too. If you want to do something a little bit correlated, nuclear, power, AI, all that jazz. There's a lot of stocks moving, and they have been. Like Graham said, Oklo, SMR, NNE. I mean, they're all moving crazy right now, despite what the market does too, by the way.
Yeah. Yeah. They've been a hot commodity, hot in the right way for nuclear. Although Chris says in the chat, as a former nuclear power plant operator, nuclear is not a scary word if you educate yourself, just FYI. So certainly not scary in the stock market right now. All right, we've got about 4 minutes left here, which gives us time to jump into our big question. And we'll go in the same order we did on the lightning round. So we're starting here with
Oh my God.
Graham.
Wow.
What are you saying?
To the downside, possibly.
Sorry, what was that for the lightning round?
I was sorry. I heard Lance didn't know if he wanted to jump in.
By the way, the Pfizer puts are up 34%. Bristol Myers puts are up 43%.
Wow.
ABBV puts 3% because they're less liquid. But I'm telling you, those short-term puts move.
So there you go. You show up to the round table, you all get paid.
Right, you show up to the round table, you're up like 70%, and I don't know what's happening. The healthcare stocks, they were all hitting the penny option scanner, and now they're all just tanking. Let me see
We
if
added Merck to our watch list in the pit at 11:57.
yeah, something must come out here because they are just crashing here. So like, I'll send a screenshot on my Telegram. I mean, this is pretty insane.
Wow.
Yeah, so come to the round table every time, gang.
Probably front running something that's going to drop on True Social here in a few minutes or something like
Yeah.
that.
You never know.
So big question. Before we move and get Chris's watch list, I wanted to ask everybody, what's the number one thing or one thing that you're looking at right now to pick your trades in this chaotic market? So whatever you think people need to know about, and Graham, we'll start with you and go in that same lightning round order from the start.
Cool. Well, we've been trading a lot on just the overall momentum of the markets. I did a training last Thursday for free where how I gauge and how I quantify momentum. It's been bullish since on the exact rules I use since April 29th. It was a big buy on the markets. The SPY was at 550. We're at 590 now, so about a 8-9% move in the broad markets over the last few weeks since we got that positive momentum reading. So that's what I'm looking at right now. Now we have seen some actually, let me share a screen. It'll just be easier. Real quick. We have seen, let me pull this up here. Sorry, there's the NVIDIA trade if you missed it. So here you can see down here, this lower study, green, positive momentum, yellow, neutral, red, negative. Obviously, called that drop there pretty good. So here was our first positive day right here. You can see momentum moving higher and higher and higher. We're still green, but we've seen some consolidation here over the last week or so, 2 weeks, which can be a little bit hard for predicting direction where it's going to go from here. So I'm interested to see what I know, Chris, you've got something going where this consolidation actually tees up some of your best trade opportunities. So this is what I'm looking at now. Still positive on the momentum, but we have seen some consolidation, and we just need a directional move from here, hopefully to the upside.
Love it. All right, Nate, how about you?
Similar to Graham, looking at for the things that are, kind of leading the pack. Like I said, I think we have a very aggressive market right now where the leaders are going to outperform in the short and medium term. I do think there's concerns of that setting us up for a bigger flush. But in the meantime, I'm being as aggressive in following those leaders. I think for all the people, which was hundreds who said like they don't think the market's going to be flat, there's going to be either a continued squeeze or a move back. That's also something to pay attention to what Chris is going to share, because once you find stocks that are, especially the ones that are kind of like consolidating, then you're going to have an opportunity for outsized moves in either direction. So there's a lot of things that I think we've said that foreshadow what Chris is going to talk about in terms of how do you take all that and actually find stocks that fit the opportunities that we're describing. I'm a little more boring probably because I follow like a lot of the the ones that I mentioned, but having peeked at Chris's scanner and knowing some of the ones he's going to talk about, there's some pretty cool undercover stocks that you can be trading right now as well.
And that's the key, by the way. What Chris's scanner has is those undercover stocks that Nathan mentioned. Those are the ones you want to focus on right now. That's the key, is those darlings that no one else knows.
Love that.
That was really what I wanted to mention is like everyone trades mainstream. Everyone's trading NVIDIA.
Yes.
Everyone's trading Mag 7. Everyone's trading the SPY and the Qs. And that's great. There's liquidity, there's zero DTEs, and all the stuff is evolving. All that's great. But if you're looking for, look at just the NVIDIA trade that Nate posted and Graham posted. And Lance has already had several increases. People that have taken Lance's trades are already up in profit. Like things are moving, and they're going to be moving. So I'm looking for opportunities for return on capital. I'm looking for opportunities where I don't have to care about what Trump's going to tweet. I don't have to care about what the Fed's going to do with the next, maybe a cut in September. Maybe they don't. Maybe they do. It's like that. That's what's. Think about how nasty sentiment was for 11 straight weeks, and it was dead wrong. It's like sentiment was so bearish for 11 straight weeks. It was the worst we've seen since 1987 when the AAII sentiment came out. But yet it was dead wrong. And it's like it's just the cycle has to go on. And look, there's going to be setups in the market where if you look at the broad market every single day with an advanced decline, yesterday, for example, we had about 75 or 80% of stocks in the S&P up. And last week on the scare with Apple tariffs and Eurozone, we had 75 to 80% of stocks down. So there's always going to be winners and losers. But the nice thing is the stocks move to the downside about 3 times faster than they do the upside. And there's going to be something that's moving. What you're going to see is I've got something scanning over 10,000 stocks, and I can find what this week is actionable to be about 13 or 14 stocks that I'm trying to trade. So there's good reward to risk. It's just a trade. You define the risk. You take plenty of trades to take plenty of swings. And the nice thing is the upside is, triple digits or better. That's hopefully the plan. So anyway, I think there's always going to be opportunities for us in the markets. And I think as we said this multiple roundtables now, this is a trader's market. Even though this recovery has happened and most people that are sitting on the sidelines with $7+ trillion in money market instruments and illiquid CDs, here's my concern. Let's say $7 trillion gets off the sidelines. When? At all-time highs? Like, how terrible is that as an investor to get in, buy these all-time highs and have like maybe a melt up, but it's like, that timing is terrible, So anyway, I say we trade the market and that's how we make the most money.
Awesome. And we're going to dive into that in just a second. Lance, I know you're looking at the scanners. Those have already paid off for us in this briefing. Anything else that you're looking at when you pick trades?
Pretty much exactly what Chris just said. So fantastic to listen to. And I'm very interested in hearing what's next because that's key. You don't have to, like Chris said, time the next tweet, tariff, all that stuff. In fact, it's very difficult, especially right now with kind of the melt up we've had, as the gentleman mentioned. It is difficult because you don't know what's going to happen overnight. Look at this weekend, market squeezed up higher and then continued. It's very difficult. So if you could pick your spots selectively and individual tickers like Pfizer, 55%, Bristol Myers, 53%, ABBV, 16%. These healthcare stocks are really going down. These aren't household names that you would look at every day. You look at NVIDIA, AMD, Apple, Google, Amazon, but everyone else is looking at that. So you don't have too much of an advantage. So if you could try to find some, the actress before she's a Hollywood star, you're going to, I don't want to say get in cheap, but you don't have to bet the farm on what's NVIDIA or what's Apple going to do next week. And you can take small shots, risking a little bit of capital. When you're wrong, you're going to be wrong. No worries, right? The max you can lose when you buy an option is the price you pay. It's going to happen. And when you're right, you're going to hit hopefully a big winner, like Chris said, double digit, triple digit winner. And that will make up for some of those losses. And if you can do that, day in and day out or week in and week out and pick your spot selectively, that is key right now because I don't think anyone knows if the market next month is going to go higher or lower. That's very difficult. So why put yourself in that scenario, trying to time GDP or something like that? Pick your spot selectively, trade small, toss your ego aside, especially you guys out there. We have egos. We want to be right. Don't worry about being right. Worry about when you are right, you win big. If you're wrong, brush it off, wake up the next day. Every day, the market's going to give you new opportunities, and days that, it's not looking your way or you're busy or just not feeling good, take a day off, observe, study, and then get back at it.
Awesome. Thank you. And 10 minutes ago, news broke about a big lawsuit against United Healthcare. So maybe that's part of it.
Oh, boy.
All right, Jeffrey, you're up next. Lightning round, big question.
Yeah, I mean, basically I go at the market every day and, I start the day looking at what's moving. And usually that's what's interesting today. Out of the thousands of stocks we have, usually just a small set of them are actually moving today for whatever reason that might be. That's usually where I hunt for opportunity every single day. I go live on YouTube first thing in the morning, jeffreytrader.com/YouTube. If somebody wants to throw that in the chat, that's what I do every morning. If you're interested in finding out what I'm watching, that's where it is. And, for bigger picture, finding those undercovers. That's the stuff that you want to pay attention to. And that's how I find that stuff that I pay attention to. And Chris has his scanner that he's building that, it's going to find interesting stuff too. So interested to see what he's got.
Awesome. Thank you, Jeffrey. Kane, you're up next.
Yeah, so I think one thing to remember, especially for a retail trader, is that chances are that you're a directional trader without whether you recognize it or not. If you're a retail trader and you don't have like a ginormous account, $1 million account, you are most likely a directional trader. If you're not just sitting there buying iron condor or selling iron condors this whole time, then you're a directional trader. Even if you're selling covered called or buying or selling naked puts, you're still counting on a directional movement, although you may benefit if it just goes sideways. So the fact that most of us by default are directional traders, you do want to find those stocks that are moving, and you do want to have some sort of tool or some sort of process that kind of feeds you those opportunities. Otherwise, you're going to have a really hard time, especially right now in the type of market that we have right now, things that are really news driven, to be able to isolate a particular ticker that can be protected from news, like UNH. Stephen just told us it got hit by news, but guess what? I think it was at the beginning of April, everyone was thinking that healthcare was the safe sector to be in because there didn't seem to be a way to tariff healthcare stocks. Although Trump did come out later and say he was going to somehow tariff healthcare stocks, but then we get hit by other news. So the other thing is, if you're looking at things that are moving today, unless you're a really short-term trader, like I'm going to trade today, I'm going to day trade. Well, if it's moving today, it may or may not be moving tomorrow or the next day. So you have to have a way of identifying that it's going to continue to move. So that's why tools like what Chris has, like what all of us, all have our own version of that. But to be able to have something that is super easy so that you can just pull up on your screen and it's vetted for you, there's been research put into it and it's been proven, then you definitely want something like that on your side.
Fantastic. Roger, anything you want to add there?
Yeah, just real quick. Can I share my screen? It'll just take a second.
Sure.
Okay. So just want to show you guys something. In order for you to make money, a stock has to be moving. This scans a lot of stocks. And right now, this has to be at least 100 for this to be moving. It's at 43 to the upside. How about here? 5. This is usually at 100 or over. How about 20-week highs? 21 versus 7. This is usually at 100 or over. 50-day highs, 45 and 9. Point is, these are all my trend filters, and they're telling me that there's nothing moving right now. So I'm going to give you guys a little news flash line. You can't make money unless stocks are moving, and this measures all large caps with volume. Nothing is moving right now. So if you want to make money with direction, you got to find stocks that are moving, or you're going to be fishing in a very small pond. You don't have any momentum right now. When you don't have any momentum, you take non-directional trades or you sit it out. That's all I'm going to say.
Awesome. Thank you, Roger. And Chris, as I understand it, from what I've seen in your scanner, you're able to pick those stocks a little bit that are about to move and maybe haven't started making those big moves yet. So
Yeah.
why don't you tell us what you're doing?
Yeah, they are coiled and ready to rip. So let me go ahead and grab the screen here for just a second and let's chat.
And just to jump in, I mean, what I think it's a perfect segue. What Kane said is you got to move around and find the ones that are going to move day to day. So if you're late in the game, you are probably missing the hot spots as you move from stock to stock. So finding them coiled up, ready to move, is the perfect segue, Chris, I think, for exactly what Kane was just talking about.
Yeah, and I mean, honestly, I reviewed everything this week. I mean, what you're about to see here is, years of labor-intensive needle in a haystack searching on my own to now literally 30 seconds you can have trades spoon-fed to you that are looking really good. So I'm really excited about this. I know, Nate, you've had an awesome hand in this as well, and I'm really excited about all of this today. And it just actually it exceeded my expectations, which I set the bar pretty high when I'm taking trades with live